Good morning, folks. My name is Brian Baker, Director of Railcar Logistics at PFL. We hope that everyone had a great weekend. Stocks bounced higher on Friday to close a chaotic week in the financial markets, helped in the end by Federal Reserve Chairman Jerome Powell's reassurance that rate hikes on the order of 75 basis points were off the table for now. Volatility on Friday was added by Elon Musk's announcement that his planned acquisition of Twitter was temporarily on hold because of concerns about fake accounts, which initially sent the stock reeling down 9.7%. Maybe Musk wants to buy cheaper in the wake of the off-market selling off. Time will tell. The Dow closed higher on Friday of last week, up 466.36 points, but down 702.71 points week over week. The S&P 500 closed higher on Friday of last week, up 93.81 points, but down 99.45 points week over week. The Nasdaq closed higher on Friday of last week, up 434.04 points, but down 339.66 points week over week. In overnight trading, Dow futures traded lower and are expected to open down this morning, minus 49 points. Friday's close was the highest for WTI in 6 weeks and is the third price rise week over week. On the demand side, China is pledging to help support its economy, open up shops, and ease travel restrictions in Shanghai this month. However, the USD still remains near 20-year highs and will put pressure on oil prices going forward. WTI traded up $4.36 a barrel on Friday of last week to close at $110.49. U.S. commercial crude oil inventories increased by 8.5 million barrels week over week. U.S. crude oil inventories are 13% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 3.6 million barrels week over week and are 5% below the 5-year average for this time of year. Distillate fuel inventories decreased by 900,000 barrels week over week and are 23% below the 5-year average for this time of year. Propane propylene inventories increased by 3.4 million barrels week over week and are 8% below the 5-year average for this time of year. Propane prices saw some relief week over week, dropping 3 cents a gallon to $1.28 per gallon, but prices are still up 45 cents per gallon year over year. Oil is lower in overnight trading, and WTI is poised to open down 52 cents per barrel from Friday's close. Total North American rail volumes were down 1.9% year over year in week 18, resulting in quarter-to-date volumes that are 4% down year over year and year-to-date volumes that are down 3.9% year over year. 7 of the AAR's 11 major traffic categories posted year-over-year declines, with the largest decrease coming from intermodal down 3.1% and grain down 18.7%. The largest increase came from motor vehicles and parts, up 27.4%. North American rig count was up 6 rigs week over week. U.S. rig count was up by 9 rigs week over week and up by 261 rigs year over year. The U.S. currently has 714 active rigs. Canada's rig count was down by 3 rigs week over week and up by 29 rigs year over year. Canada's overall rig count is 88 active rigs. Overall, year over year, we are up 290 rigs collectively. A few things we are keeping an eye on. New anti-gouging bill to be proposed by the Dems in Congress next week. Here we go again. Let's blame the companies and the rest of the world for a high price of gasoline and other products. The more they talk about it, the more they think you believe it. The U.S. House of Representatives is going to vote on a price gouging bill this week that would make it unlawful for companies to charge unconsciously excessive prices for gasoline and other refined products during energy emergencies. Biden cancels massive oil and gas lease sale. The Biden administration canceled one of the most high-profile oil and gas lease sales pending before the Department of the Interior on Wednesday of last week. As Americans face record high prices at the pump, you can't make this stuff up, folks. See PFL's Rail Report for further details and up-to-date retail prices. On May 10th, the EIA announced that U.S. crude output will grow slower than expected this year and next year. U.S. crude oil production is forecasted to average 11.9 million barrels per day in 2022. See PFL's Rail Report for further details. The reading of PFL's Rail Report today is an absolute must. Not only do we dive into more detail as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, and dive into the latest U.S. employment situation. Bottom line, a lot of great information and a lot of fancy graphs. We hope that you enjoy reading PFL's Rail Report today. We do it all for you folks. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885.